Hello dear friends, all change begins with finances, and today is about financial information that I have tried to simplify and summarize as much as possible, because the subject is very complex but very important. Opinion piece. Basel III initiates the gold standard. It comes into force on Monday, June 28th. Gold should be physical and not symbolic. It is a gift to gold investors. Turns gold into a zero-risk asset. ECB allows banks to take on more debt. Banking prepares for a new regulation. Each bank will have to keep physical gold in its vault. There is a climate of Cold War in the gold market. Gold leads its biggest weekly loss in more than a year. China, Russia, India and Turkey have doubled their gold reserves. Bitcoin falls below $36,000 as pessimism returns. Let's start. Gold will become a level 1 asset on a zero-risk asset. As of the entry into force of the Basel III Accord for European Union banks next Monday, June 28th, and on January 1st, 2022 for British banks. This means de facto the introduction of the gold standard in the global financial system of which we have spoken so much, while some banks and countries have begun to accept Bitcoin, which has no gold backing. According to this new rule, gold bullion is considered cash and therefore with a 0% risk weighting. But the most interesting point of this rule is that gold must be physical and held in each bank's own vault, or it can also be held on allocated basis. Therefore, gold must not be in paper or owned or leased by someone else, as most gold investments are leased, borrowed or held in paper. It appears that very important changes are coming in the global financial system. Risk-free investment. Since gold will have a risk-free status, many banks will be encouraged to buy more for accounting purposes. This will also greatly encourage all central banks to increase their physical reserves of this bright yellow metal. Overall, Basel III will be excellent for physical gold, and everyone who has invested in gold will be guaranteed their investment, so you could say it is like winning the lottery. These rules will allow physical gold bullion, but not paper gold, to be on par with cash and sovereign debt instruments. If banks hold and own gold bullion, they can use that asset as equity, and therefore this will allow them to print more money. Banks around the world have been buying large amounts of physical gold and taking deliveries. For the first time in 50 years, central banks bought more than 640 tons of bullion last year, nearly double the amount in 2017, and the highest level since 1971, when President Nixon closed the gold window and forced the world into a floating rate currency system. Economic recovery. Full, timely and consistent implementation of Basel III is critical for a sound, well-functioning banking system that is capable of supporting economic recovery and growth in a sustainable manner. After a 1-year delay to increase the operational capacity of banks and supervisors to respond to the health crisis, these reforms will take effect globally as of January 1st, 2023, and will be phased in over 5 years. Basel III will make it problematic to hold unallocated gold. A gold certificate is in general is a certificate of ownership held by owners of gold rather than storing the actual gold. It has both historical significance as US paper money and current significance as a way to invest in gold. Banks can issue gold certificates for allocated gold, meaning non-fungible, or unallocated gold, meaning fungible or pooled. Fungible goods. Fungible means consumed with use. Fungible goods are movable goods of which the use appropriate to their nature cannot be made without consuming them, and those in substitution of which another of equal quality is legally admissible. In finance and investment, commodities, common stock options, and dollar bills are examples of fungible property. A commodity must be fungible before it can be traded on a commodity exchange. Gold is naturally fungible because 1 ounce of gold is equivalent to another ounce of gold. Gold bullion can be given unique serial numbers and purchased by individual investors while still in the hands of a custodian. Under this arrangement, gold is said to be allocated. Allocated gold holders have better legal protection in the event of bankruptcy. They own particular gold bullion, which is not considered fungible property. When fungible goods receive numbers, they may no longer be fungible. By adding unique numbers to bullion, collectibles and other fungibles can be distinguished. Therefore, they may no longer be fungible in some cases. Non-fungible assets. Hard assets. Assets such as diamonds, land, or baseball cards are not fungible because each unit has unique qualities which add or subtract value. For example, because individual diamonds have different cuts, colors, sizes, and grades, they are not interchangeable, so they cannot be considered fungible assets. Real estate. Real estate is never truly fungible. Even on a street of identical houses, each house experiences different levels of noise and traffic, is in different states of repair, and has unique views of the surrounding area. Definition. Basel III is part of a series of initiatives promoted by the Financial Stability Board and the G20 to strengthen the financial system in the wake of the subprime crisis. This is the first review of Basel II and was carried out throughout 2009 to be implemented as of December 31st, 2010. The Basel III reform was motivated by the observation that the 2008 financial crisis is largely explained by the excessive growth of securities on banks' balance sheets and also off balance sheets, as in the case of derivatives, and the simultaneous fall in the level and quality of own funds set aside for risks. Indeed, many institutions didn't have sufficient reserves to face a liquidity crisis. In this context, the banking system initially proved unable to absorb the losses on structured securitization products and had to take on the re-intermediation of some of the off-balance sheet exposures. At the worst time of the crisis, uncertainties weighed on the quality of balance sheets. The solvency of banks was in question, and this led to systemic risk problem. The existing interdependence could cause the insolvency of one to trigger the insolvency of the next, which generated a widespread crisis of confidence and cash. Taking into account the role of the financial system in finance and the real economy, the international nature of financial institutions and losses assumed by states, mainly throughout bailout plans with public funds, the coordinated intervention of international regulators was considered legitimate. Unlike Basel I and Basel II, both of which focused primarily on the level of the reserve banks must hold for bank losses, Basel III focuses primarily on the risk of bank panic, requiring different levels of capital for different types of bank deposits and other loans. Basel III doesn't replace, for the most part, the already known guidelines such as Basel I and Basel II. Rather, it complements them. Cold War. There is a climate of Cold War in the gold market. For the first time in 50 years, central banks bought more than 640 tons of gold bullion last year, almost twice as much as in 2017, and the highest level since 1971, when President Richard Nixon closed the era of the gold standard, writes Alessandro Platerotti in Kenzokaspi. It's not clear whether by choice or by chance the Bank of International Settlements in Basel, Switzerland, called the Central Bank of Central Banks for its key role in the global financial system, has set a date with history for March 29, resurrection of the gold standard in the banking world. China, Russia, India and Turkey have been the nations that have bought the most gold in the last 2 years, with Moscow even liquidating its entire portfolio in US government bonds to replace them with precious metals. But the problem is not this, it is the price of gold. In 2018, monetary authorities on all continents, but especially in Europe, bought as much as 641 tons of gold bullion. This is the highest level since 1971. The maneuver is unprecedented and should be seen in the phenomenon of repatriation of bullion from state custody. Central banks withdraw 7,000 tons of gold reserves from the Federation's coffers. Reserve Bank of New York, while 400 tons were secretly released by the Bank of England. With this system, those who seek gold as a safe haven, such as China, India, Russia and Turkey, have practically doubled their gold reserves in the last 5 years. Moscow, to buy gold, has even sold the last 20% of US government bonds it held in foreign exchange reserves. Gold standard. The gold standard is a monetary system that fixes the value of the currency unit in terms of a certain amount of gold. The issuer of the currency guarantees that it can be the holder of its banknotes the amount of gold consigned in them. An alternative is the bimetallic standard, in which the currency is backed by one part gold and one part silver, as happened in Spain, when they backed the pesetas in silver for lack of gold after the Spanish Civil War. At the end of the 19th century, Spain was the only European country that still had incompatible paper. The gold standard, or is a monetary system characteristic of the 19th century, in which the value of a country's currency was fully convertible into grams of gold, since the central banks were obliged to convert it when a citizen demanded it. In other words, it was possible to demand the exchange of banknotes into gold. In addition, there was free circulation of capital. In other words, individuals had the possibility of exporting and importing capital in gold, but represented in paper money, hardly in cash. Historically, the validity of the gold standard began during the 19th century as the basis of the international financial system. It ended after the First World War, since the belligerent governments needed to bring a lot of fiat money to finance the war effort without having the capacity to back that money in precious metal. Great Britain, the flagship country of this standard and the one that gave it solidity as a secure means of transactions, abolished it in 1931. During the Bretton Woods agreements, it was decided to adopt the US dollar as the international currency, and at the condition that the Federal Reserve would uphold the gold standard. But as of 1971, the standard was definitively broken, so the dollar became a fiduciary currency, backed by a government imposition with no intrinsic value, but with a legal value. Advantages of gold. Throughout geography and history, many goods have been used as money: shells, cows, salt, tobacco, metals, etc. But the most appreciated was gold, used since the beginning of history. Its characteristics as a durable, divisible, homogeneous, and difficult to quantify good made it the liquid good per excellence in almost all the cultures of the planet, which is why it was accepted by people to serve as currency. In practice, the most widely used fractional currency throughout history has been silver, although the reference value was gold. Therefore, when we speak of a gold standard, we don't mean that we are always talking about circulating gold coins or promissory notes backed by readily available gold reserves, but of a monetary system backed by a tangible good with value in itself. One of the problems of metals as currency is their weight, which is why banknotes soon became common, appearing as signed promises to deliver to the bearer the amount of gold indicated on them. The banks issued these bills taking care to maintain a balance between the money they had issued and the gold reserves they kept in their vaults. Otherwise, they would lose the confidence of their clients. How the system works. The existence of the pure gold standard does not cause inflation. It is only produced by the relaxation of its convertibility and the possibility for banks to operate with fractional reserve cash by increasing the money supply in relation to available goods. In the US, where agriculture and the owners of silver mines were pressing, a conference was held in 1878 to return to bimetallism, but the attempt was frustrated by the opposition of Great Britain and Germany. At the beginning of the 20th century, the entire international system was based on gold, However, only England, Germany, France and the US maintained a pure gold standard. There were paper gold coins, banknotes and fractional coins in circulation that could be exchanged for gold held by the central banks in their vaults or in their national treasuries. Even so, in France there was a limping gold standard, for although silver was not freely minted, it remained legal tender. Moreover, residents and foreigners could convert Bank of France bills into gold or silver coins at the discretion of the authorities. New banking regulation. Banking is preparing for new regulation. In the digital order, operational resilience in lending at the time of restructuring of corporate value chains, climate risks, the complex coexistence, hardly peaceful, between cryptocurrencies and digital currencies reinforce corporate governance controls, dynamic data management models, optimization with structural changes in business models, and renewed customer protection mechanisms. A tsunami after the seismic whiplash caused by the health crisis. The extreme volatility, uncertainty, and high complexity of the past year have generated a period of reflection in the national banking industry. The seismic turbulence of 2020 has given way to a period of expectation of change in the rules of the game for the sector. A sort of roadmap with a panoramic vision and a long roadmap which will touch on several regulatory keys, among others that of the supervision of digital transformation and technological innovation, that of corporate governance in the face of remote working modalities, that of financial resilience in the face of the economic situation and the regulatory changes in the making, that of more demanding requirements in terms of money laundering and tax evasion, climate risks recently incorporated into the monetary policies of central banks, protection of customer information, review of business models in which banking will have to face structural reforms and advances in the creation of a more dynamic management in the handling and use of the big data. News in brief, or short news. ECB allows banks to borrow more until the end of March 2022. The European Central Bank is to allow banks to exclude exposures to central banks from the leverage ratio for a longer period of time, allowing them to borrow more because exceptional macroeconomic circumstances remain in place. These exposures include coins and banknotes as well as bank deposits held at the central bank. By excluding these exposures from their leverage ratio, banks will have more room to borrow more because the ECB doesn't require more capital for them to do so. Gold leads its biggest weekly loss in more than a year. The price of gold fell more than $50 a day after the Federal Reserve signaled faster interest rate hikes. Gold is headed for its biggest weekly loss in 50 months, weighted down by concerns about tighter monetary policy. General Milley says China has ways to go before it can take Taiwan. Despite the continued hype surrounding a possible Chinese invasion of Taiwan, Chairman of the Joint Chiefs of Staff, General Mark Milley, believes China has a ways to go to develop the capability to take the island of Formosa. Milley said he doesn't believe China will try to take Taiwan anytime soon. In quotes, I think at this point there is little intention or motivation to do it militarily. There is no reason to do it militarily, and they know that. So I think the likelihood is probably low in the immediate near-term future. Bitcoin falls below $36,000. Bitcoin has fallen approximately 5% in the last 24 hours, breaking the crucial $36,000 support level. The digital currency capitalization continues to rise up to 23% from the time being compared to the heights reached in early 2021. Spain. BBVA opens Bitcoin trading to clients in Switzerland. The Spanish bank said Friday it was launching a Bitcoin trading service for private banking clients in Switzerland interested in investing in digital assets. IBEX 35 plunges almost 2%. The IBEX 35 closes the session down 1.8% to more than 9,000 points. The Spanish selective index didn't successfully face the quadruple witching hour, as did the rest of the European stock markets, among which he falls of 2% in London's FTSE 100 standout. Spaniards request an average of €1,500 to finance their vacations. Between March and June of this year, Spaniards have requested more than €50 million in financing for their vacations, with an average of €1,500 per trip, according to data from the credit platform United Credit. The job offer is so successful that in 24 hours it has already received more than 500 applications. The Hotel Tui Blue Isla Cristina is looking for a person to stay from July 15 to September 15 in one of its rooms and charge for it €2,000 per month. Misery in the fields of Almeria, a melon that nobody wants to open. The crisis in the sale of watermelon and melon is taking ahead of Almeria farmers who accumulate millionaire losses, failures in the value chain, difficulties in planting, speculation and trade agreements with third countries such as Morocco weigh down the orchard of southeastern Spain. The police and the civil guard has dismantled a violent criminal group dedicated to debt collection, which was led by a construction businessman linked to the world of fitness in Seville, and whose lieutenant was a saucer ultra convicted of assaulting a rival fan. International. Cusco will celebrate without public the ancestral festival of the sun. The ancestral Incan ceremony to the sun god, which gathered every June 24 thousands of tourists in the city of Cusco, will be celebrated without public for the second consecutive year due to the sanitary crisis. In the Inti Raymi ceremony, actors embody Pachacutec, the forger of the Inca Empire, and his wife Mama Anahuarque, in the main square of Cusco, the ancient imperial capital. Nigeria could launch a digital currency by the end of the year. The Central Bank of Nigeria is preparing a pilot digital currency that could be launched by the end of this year. Nigeria banned its bank and financial institutions for from trading or facilitating transactions in cryptocurrencies in February after growth in monthly cryptocurrency transfers. The world's first electric flying car takes to the skies for the first time ahead of its air racing debut. The world's first racing car, capable of going from 0 to 100 kilometers per hour in 2.8 seconds, as fast as Formula 1 racing car, has flown over the desert in southern Australia for the first time ahead of its air racing debut later this year. It is the airspeeder Mk3, designed by the Australian company of the same name. The company revealed that 3 individual events will be held during the tournament in locations inaccessible to traditional motor racing. The competition will be opened up to 4 teams with 2 drivers each who will drive the vehicles remotely. And that's all for today. Thanks a lot, dear friends.